If you're new to cryptocurrency, you may have heard the term Bitcoin thrown around and been left wondering what exactly it is. This beginner's guide will cover the basics of Bitcoin so you can better understand this groundbreaking digital currency. So, what is Bitcoin? Simply put, it is a decentralized digital currency that uses cryptography for security. It was created in 2009 by an anonymous individual or group using the pseudonym Satoshi Nakamoto. It has since become the world's most widely known and widely used cryptocurrency. One of the key features that sets Bitcoin apart from traditional currencies is that no government or financial institution controls it. Instead, it relies on a decentralized network of computers to process and verify transactions using the blockchain. The blockchain is a public, distributed ledger that records all Bitcoin transactions. It comprises data blocks containing a list of transactions linked together and secured using cryptographic principles. This allows the blockchain to provide a secure and transparent record of all transactions, making it difficult to cheat or manipulate the system. So how does Bitcoin work? When a user wants to send Bitcoin to another user, they create a transaction and broadcast it to the network. Network nodes then verify this transaction through complex mathematical algorithms. Once it is verified, it is added to the blockchain. Verifying transactions and adding them to the blockchain is known as mining. Miners use powerful computers to solve complex mathematical problems. They are rewarded with a small amount of Bitcoin in return for their work. This helps to ensure the integrity and security of the network, as it requires a significant amount of computational power to add new blocks to the chain. One of the key benefits of Bitcoin is that it allows for fast and secure financial transactions without the need for intermediaries like banks. This makes it an attractive option for people in countries with unstable economies or restrictive financial systems and those who want to make international payments or conduct business anonymously. However, it's important to note that Bitcoin is still a relatively new technology. As such, it is not without its risks. The value of Bitcoin can be highly volatile, and it is common for it to fluctuate significantly quickly. This makes it a potentially risky investment. It is essential to thoroughly research and understand the risks before deciding whether or not to invest in Bitcoin. In addition, because any government or financial institution does not regulate Bitcoin, it is not insured like traditional bank accounts are. If your Bitcoin is lost or stolen, it may be difficult or impossible to recover. Despite these risks, many people see Bitcoin as a potential investment opportunity. They are attracted to its potential for high returns. It is also increasingly being accepted as a form of payment by merchants worldwide, including major retailers like Overstock and Expedia. In conclusion, Bitcoin is a revolutionary digital currency that has the potential to change the way we think about money and financial transactions. While it is not without its risks, it has already had a significant impact on the world of finance. It is likely to continue to do so in the future. Whether you are considering investing in Bitcoin or want to understand more about this fascinating technology, this beginner's guide should provide a solid foundation to build.